Now, it's important to enter into stress-free trading positions, especially for catalyst days like today. Now, I've already done this several times throughout the Discord server. Now, you can watch all these videos here, watch my daily briefs where I explain how entering into trading ranges and protecting your positions and hedging them can help you, especially if you're taking larger positions. This is the best way to scale. Yesterday we had a really good day from members, just very good play, right? Very good. Most importantly, it's about protecting your trade, right? And you realize how being stress-free and protecting your trade is so important, right? Stress-free trading, it is just very important. Now, yesterday we had a chance to do that just before today's catalyst events. So in a nutshell, we took calls here and we took some puts here. So you would have effectively a straddle here for about 3.5 points to 4 points. So no matter what it's gonna happen later at 8:30 a.m. where the PCE report will be, or 10 a.m. where Powell will speak. Now this is a double catalyst, right? So you can imagine the market to be extremely volatile within this next 1.5 hours, even pre-market. But no matter where the market trades now, because you got into positions here and here, now you're good to go. Now, in order for you to know when to get into the trades, it's very important that you know the microstructures to enter into it. And this is where having the microstructures to enter into trade is quite important. You need to understand the structures in place so that you know how to enter the trade. So in this case, we entered this trade here at the trade number 3, where we took a major position here right at about 1 p.m. right, where we assess our risk and reward and be in position for tomorrow, because we were preparing for a macro cup and handle formation in order for it to close partially or the gap. You can watch yesterday's video analysis here. I talked a little bit about this while we prepared for it. And so once you got into positions here for today, right, and we saw that the structure worked itself out, especially on the 30-minute chart. You see the macro cup and handle, and we broke through this very important neckline here, right? So if you took your calls here, well done, right? And you would have taken your puts here as well to hedge just before today. And that was also talked about here, right about 347. Right, it's good enough. If you're up here, you can take a straddle. So as I mentioned, you're about 4 points up, 3.5 to 4 points up. You're good to go for today. No matter where the chart will trade, you're going to be profitable if you close your calls at the right time and close your puts at the right time. There's no way you're going to lose money today. Right, so I took some for the educational sake here, calls and puts. Right, so I'm going to see. I can see my time that I bought it, my calls and my puts here. But on the macro level, members would know that I shorted here, actually at the top here, right? I shorted SPY, and I bought some calls to hedge at this level, right? 411 calls here. So I'm good to go at the top and the bottom of the range. I explained this strategy. I also did it previously to this. You can watch the video here, right? Talked a little bit about it. And this is only possible if you understood really how trading ranges work. So right now we established that we had a trading range here for 407, right? And we had a secondary range here at 411, which we bounced off. So that's what we were looking for. We have another range here at 417, and this was the neckline of the cup and handle that we just only broke through yesterday, right? We had another level here where we closed the gap. We will close the gap about 421. And finally, the top of the range, 424, if we do get there. So today, we will be trading between this range. And that will mean that today's IV, or implied volatility, which is a measurement of the range of travel the stock is, and this will increase the value of your options. So if you're in today and the IV spikes tomorrow, you don't only make money from the intrinsic value of the options, but also the extrinsic value as well. We're banking on that as well. That's why we got into position. Now, I will talk a little bit more about that, but you can imagine if we have a bearish scenario today where both catalysts are bearish. I'll explain a little bit more later on that. We may head down all the way to 407. And if Powell and the PC report is bullish, and we may head back to 424 today, it's very possible that we may even go up even higher. We shall see how this goes. But currently we're about 418, I think, about there. So we have a very large range. This should be the trading range. The extreme ends based on the IV for today at least. So you see, understanding trading ranges, getting into position, and seeing that we're actually in the middle of the possible ranges here right now, right? It's a little bit unsettling. We're in the middle. So you can imagine in the catalyst event, you have to open a position with high IV, high implied volatility, in the middle of the trading range. Is going to be really stressful, and this is why you must enter into positions before that so that you are stress-free for today, and that's what we want to be doing. So as usual, the setups are in place here, whether it's in the daily brief videos or the live analysis setups that I explained. And all these are quite important. Please run through them, have a better understanding of how to day trade. I'll also be running through all these in a more detailed video over the weekends. So I'll be running through as well on how to take trades based on confirmations, my thought processes. Apart from the analysis of entering the trade, it's also important that you understand how to assess your risks during the trade. And when you see a trade setup, how do you approach the trade? How do you manage your risk on a trade? I'm going to explain that in a separate video. So please like, comment, and subscribe if you would like to see that. So now let's prepare for today. Now, very simply, we're talking about a very big event today, and that's a little bit out of our control, right? At 8:30, we have the PCE report. Now, the PCE is another version of the CPI report. It's an inflation report. Now, there are two components for the report. Now, firstly will be the PC price index. That's the main report. Now, we're expecting 7.4% this month, right, comparably to 6.8% in the previous month. So we are expecting some form of increase. Right, but the more important indicator is the core CPI, and our core is taking away your very volatile components of such as energy and food. We're expecting this core component to lower to 4.7% from last month's 4.8%. So this is what you want to be looking out for. If the report today is more than 7.4, and if the core is more than 4.7, then there will be a sell-off, and that's only from 8:30 to 10. If you see this improving, and it's much less than these two figures, then you will see the chart going up. And this all happens pre-market, so you cannot do anything about it, right? And when 10 a.m. comes, and that's when Powell appears in a separate event that is nothing to do with the PC report, but he may take reference from it, and that will create some more variables right into this entire situation we have today, which is why it's so important to enter stress-free. He's going to speak about anything he wants, right? Especially when the FOMC meeting is 1 month away, right? He may take reference from PCE or wait till 13 September for the CPI report. But the Feds usually base the decision making on PCEs, so he may refer this, he may choose not to, he may choose to act like this is not released and he doesn't know the data, right? So you see there's so much variables that's going to happen at 10, but the market's going to react to everything he says. So we have another variable right after 8:30. So if the market moves to your favor at 8:30, right, up and down, take your profits first before 10 o'clock, where we have another variable that's happening, right? We take half your profits, you wait for 10 a.m., another tranche of what Powell will do, right? If you straddle, maybe you get both profits on both ends, why not? So we'll see how it goes later, 8:30 and 10 a.m. Okay, we're looking once again for the trading ranges. Now the end of the trading range, 407 and 424, so I'm looking for the charts to move within this range. It's a really large range, right? And middle now we're at 418. This is the trading range now. So it's important you get into positions, right? Yesterday we did the best that we can. If you are getting into positions within a day, right, we managed to get in around 414 and 418 and 419. So we have a 4-point advantage now, right? I managed to get in here at 430, 431 and 411, so I have a 20-point range. So obviously I took some profits along the way to protect the trade, but now I'm in the middle of both ends. I can take profits anytime I want after tomorrow, so why not? So that must be the strategy of how you approach into catalyst events, especially in this market right now. And Discord members, take your time to familiarize with this, understand trading ranges, understanding how to enter a trade. Now it's not so easy to also enter a micro trade, right? You have to also understand intraday where are the possible entries, then to protect your trade. So for example, yesterday we managed to enter calls here, right? We protected our calls by here, and from here on it's stress-free. We were just waiting for this structure to play itself out, and we had to wait for 3 hours for that to happen. And this 3 hours is just stress-free, right? You protected your trade is as good as profitable. You leave your stops at break even, go grab a coffee, go do whatever you want for 3 hours. When you come back, you see this, the structure played itself out, you hedge it on the other end, right? You got the top, you got the bottom, right? It's good. Now we're good to go. So less stress today. You're going to log in into the markets knowing that you're going to profit. It's a great feeling. So I really hope that you can try this even on your paper trading account. Whatever it is, do attempt to try it some way or another. This is the best way to scale. If you want to be trading 5-6 figures in a day, you obviously have to look into confirmations to enter, manage your risks, enter into bigger trades, right? You can average up here once you broke through the selling channel, once you broke through certain indicators, right? Take your profits, protect it, now average up, right? There's so many ways you can manage your risks. So I'm going to create another video to explain all that. And so once again, please run through and review the daily brief videos, right? The analysis intraday, understand how important it is to look at things in a macro level and to also enter your trades in the micro level. That's where the different time frames come into play. It's a lifelong skill, so take your time to understand the system and the habits. And once you get this done, you can do this for the rest of your life, right? And it's about scaling up. So do it small first if you need to, right? Scale it accordingly. Now, so for main catalyst events like today, right, it's going to break through the trading range, right? So we'll provide some commentary later and the Discord server, but otherwise right now it's just so dependent on what's going to happen later in the catalyst events, right? And that's why getting into position helps. Now if you're not in any positions, no shame to not trade today. Now professional traders would try to avoid days like this like a plague, because of the high implied volatility, because of the uncertainty of the news that will be released, and especially when you have 2 catalyst events within a span of 1.5 hours, one pre-market too. So you can just expect the market to be extremely volatile, but it will provide some direction for us on where trade and the market will be moving to. So if we do have a good PCI report, then we have found our support here. Then we are obviously looking at all the macro structures that we were talking about. Right, we have a cup and handle, right? We were trying to look out for a possible support level, and we found that support level here. We were looking out for the support level for the entire week, and it has appeared here. So this could be a possible structure. I was also talking about a possible right, inverse head and shoulder that could happen too. So if we do drop further down, we could find another support somewhere in time for another catalyst event. We could see also some rebound here. So there are still support levels that can support our plays, right? Especially when we have a very strong neckline here, right? So you see clear resistance levels, and that's why we were looking out for a support level here. Now we found one here so far. Let's see if this holds based on the catalyst events that we had. So we see we were planning for all these for the entire week. So we have to see how this turns out. See Powell's message on PC report. And from there we can plan on macro trades. and be prepared for next week. But otherwise, today it's a little bit risky if you're not in position. But you can just join in some momentum play. It's also possible, especially if we come across some form of resistance and support levels, right? So in this case, our trading ranges. So keep in mind of this, right? So that you can actually just plan your stop loss if you want to, right? So 407, it's one. Right here, 411, right? We have 414 and 417. We have one at 421 and one at 424. Right, so let me just write it down clearer. 407, 411, 414, 420, 418. That's where we have our puts here. That's where we have our calls here. If you were in position for straddles yesterday, right, 421 and 424. So this will be the levels that we want to be looking out for today. Now, obviously, I have them all indicated in the 30-minute chart. Right, so these are the levels. If we were playing, we should meet with some support or resistances at this level. And when that happens, we can plan our trades accordingly, put your stop losses accordingly. We shall see how the day goes. If you are trading momentum today has to be a momentum trade. But the IV is going to be high, and today is the options expiry day, so you can get ready for a lot of volatility. All right, not a very safe day to trade. I would advise, if you're not too confident, you have to reduce your positions or not trade at all today. Just sit back and enjoy the show. So, right, we'll see how it goes later. We'll see for the reports later. It's going to be a really fun day ahead, right? So thank you very much for watching, and see you later, closer to opening bell. Thank you very much.